First thing we are going to be doing in today's section or in today's teaching is that we are going to talk about how to build your bias, how to do your confirmation entry, right? How to build your bias and confirmation entry, right? Confirmation entry. And we're also going to talk about sections. We have the London section, the New York section, the Asian section, right? We'll talk about sections, right? Then we'll also learn on how to build your bias from the monthly or from the weekly down to your entry time frame. We'll also talk about time frame alignments, right? Time frame alignments. So without further ado, let's quickly proceed. So we're going to touch all this, and I'm going to give you a detailed breakdown, a chart example, a pictorial or a diagrammatical example of it. Then you get a proper understanding. So the first thing we're going to be doing here is to talk about time frame alignments. What are time frame alignments, right? So time frame alignment simply means knowing the perfect time frame to use in building your bias. For example, let's say you are starting your analysis from the weekly time frame or for the monthly time frame, where there is a specific time frames you need to use or you need to follow down to your entry time frame. So the time frame alignments we are going to be using in today's section is what we'll start from the weekly time frame, then down to the daily time frame, then the 4 hours time frame. 4 hours time frame. Then we can enter our trade from the M30, right? That is 30 minutes time frame. So these are the things we are going to be using in today's section, right? So let's quickly proceed. So the first thing I also love to talk about here is I've already shared or showed you guys my I've already shown you guys how I do my entry. So these are my entry model. I use SMC for my entry model, right? So this is my entry model. Now, let me quickly explain this entry model for you guys so you get a proper understanding. This is what we call liquidity, right? And this is what we call a sweep. We have the sweep here. We have a break of structure to the upside because this market is doing what's trending to the upside, right? Then we also have our key level or zone, whatever you want to call it. Then here will now serve as our target point. So this is my entry model, and this is what we're going to be using in today's section, right? So I'm having a lot of things I'm going to be teaching you, I'm going to be sharing with you today. So let's quickly proceed. Now, what do we want to do first? We want to go to our weekly time frame, right? On your weekly time frame, what do you want to see on your weekly time frame? Let's say for instance, this is a weekly key level, right? Let's say this key level can be a V-shaped key level or A-shaped key level, but in this scenario, let's talk on a bullish market, right? So we have this key level. What's our expectation? We want to see a reaction or a rejection, right, from this key level. That's what we want to see, a reaction or a rejection from this key level. When we get this reaction, rejection from this key level, we want to switch to the next time frame, right? This is what I talk about time frame alignments. What did I say about time frame alignments? I said we'll start from the weekly down to the daily, then 4 hours and M30, right? So if you have joined my Telegram channel, I've already shared a whole lot of stuff to you guys. Or if you join my X account or my Twitter, I'm going to be posting the link in the video description. You can click on it, join my X channel, because I've dropped a whole lot of stuff on my X page, right? So when we have a weekly rejection, we want to go to our daily time frame. On our daily time frame, we want to have what we call daily reject daily, right? Now this is it. You want to see a daily key level being rejected as well, right? This can be in form of CRT can help you. You can use CRT in doing this, or you can just use a normal rejection method, right? So when we have this daily rejection, now you go to your 4 hours time frame. Your 4 hours time frame, what do you want to have? You want to see a breakout, right? So these breakouts can be in two forms. You can have this type of breakouts, this form of this type of breakout, right? Or you can equally have this type of breakouts that you want. It will be like this. Sorry, I'm going to redo this, right? So let me just move this line so you don't get confused, right? So whichever one you see, you can see this on the 4 hours time frame, or you see this. Now let me explain these two stuff you are seeing here, right? So this particular one, please, they are still breakouts, right? So this is 4 hours breakout. You have your 4 hours breakouts here, and on this particular type of breakout you might see, like this one, you have this key level, which is a resistance broken, it will not turn to what is support, then, and which can be used as what, as a breakout block as well. Then this, which is here, is the apex key level, which is the V-shaped key level, right? So this type of breakout you might see, and you might also see this type of breakout on your you might see this type of breakout while you are doing your analysis, right? So this type of breakout always comes with 3 key level. It has this key level, which is a resistance broken, turn it to a support, and it also have this, which is your QM, right? So markets can equally use any of these key level, and you also have the apex key level here, right? So whichever one the market presents to you, you should likely know how to use them, right? And if you don't know how to use them, that's why I need to stay tuned to this video to the very end, where I'm going to be teaching you or sharing with you every necessary step-by-step guide which you need in order to get this properly, right? So when we have gotten our 4 hours breakout, now why do we need this 4 hours breakout? The reason why you need this 4 hours breakout is that the storyline you have seen on your weekly, and you also see a same storyline on your daily, right? These 4 hours breakouts will equally help you to validate all this direction which you have seen from the weekly or from your daily, right? So these 4 hours breakouts will really help you to confirm it. Like for me personally, if I should have a particular direction from the weekly down to the daily, and I'm not seeing a 4 hours breakout or a 2 hours breakout, right? At times I will just ignore that setup, right? I will just ignore it. Why at times I might just use my 1 hour as a 1 hour time frame for my breakouts. But for me personally, I will always advise you, if you are trading this strategy with me, make sure you consider your breakout should happen on the 2 hours time frame or on the 4 hours time frame. So let's quickly proceed. So now the next thing I have to share with you now is my entry model. This is my entry model. My entry model is what? SMC entry model, right? Don't forget, what we are trading here is what? Combining MSNR, CRT, and SMC together. That's my strategy. That's what I'm trading, right? You already know this if you have been with me for a very long time, right? So we trade MSNR plus CRT plus SMC. Now you might be wondering, if you are new to my channel, you might be wondering that how am I able to combine or to trade with this, because these are strategies on their own, or I will call it, these are concepts on their own, right? You might be wondering. So this MSNR it just helped me to know my precise key level I should focus on, or I should be expecting a reaction from, or where I should trade from, right? That is the purpose of this MSNR. And the purpose of this CRT, it really helps me in building bias. Just like I said here, you might have a weekly rejection on the daily time frame. If you're having a CRT, in fact, it helps me to validate what it just make building my bias very, 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 very easier and very, very, very simple for me, right? So this SMC is basically for my entry. I use SMC for my entry. So this is my entry model. So I think I've taken much time in explaining all this. So let's quickly dive in on how we can implement this on our chart. So I have a trade on USDJPY, which I would love to use in giving you a proper breakdown so you can get a proper and a better understanding of what I'm showing you, of what we are doing in this channel, right? So we'll start from the weekly time frame. Now, there's something I always talked about. If you have watched my previous teachings, I believe you will understand that I always say something that when you come to your chart, there are a few things you want to do. The number one thing you want to do on your chart, which is very, very important, is that you want to be able to identify direction, right? Direction, or the general market direction. So you want to be able to identify direction of the market, right? Then you want to be able to identify reaction areas, reaction levels or reaction areas. Let me just use the word areas here. Then you want to be able to identify the valid key levels where you want to be focusing on, right? So these are very, very important things you want to be doing on your chart. So the first thing you want to do is direction. Now you want to look or check what is the market direction. So from the look of things now, right, you don't even need anyone to tell you this direction of the market, right? So you agree with me that we are currently what? Bullish, right? Market did something like this, came here, and ever since it has been trading to where? To the upside, you can see. So market is currently what? Bullish. So since market is bullish, you want to focus on building a bullish bias, right? Yeah. So this is what I'm going to do first. I'm going to be taking out this current week we are. Yeah, I'm going to be taking out this current week we are. This is this week, and this particular week is what I want to teach you guys. I want to show you guys something, all right? So I'm going to be taking these two weeks. So let me just take them out now, then we can proceed. Now, not just this alone, this is how you can do your weekly outlook. Then you can start looking for setup during the week. In fact, you have a whole lot of things to learn from this particular teaching, which I'm going to be sharing with you right now. So this is just a fresh week. Let's say a Sunday or Saturday that the market has closed, right? You come to your chart. What do you want to do? You want to check the direction. The overall or the general market direction is showing us that market is bullish. Now you want to be able to check reactions area, reactions leg, where market has reacted to before. Now you agree with me that let's start marking out something, so don't take much time. Now we have a rejection from this OCK level. These are past reactions, right? Our focus should be what is happening in the main chart here, right? So, but I always say something, you want to check the previous market. Now after this rejection here, we got a rejection from this OCK level as well. You see how market is respecting all this key level, you see, right? And this is more of like a sweep of this previous candle, right? You can see. So let's quickly proceed. Let me zoom this so you see it better. I think I didn't draw this way. So after having this reaction, this rejection from this key level on the weekly time frame, you want to ask yourself now, where should be my focus? Because markets rejected from this key level before, traded to the upside. It came back again. This new candle rejected from same key level. I've only said something that when you're on the higher time frame, a key level that has been rejected before is still good for you to make use of, right? And it also tends to be a strong key level. You understand? So now, specifically, you don't need anyone to tell you that where we should be expecting market to drive to when the new market open should be, this can serve as our target area, this, or we can equally use this guy here as our target points. You see, so we have been able to know where market is reacting from in the previous week, right? And we're able to know where we should be targeting. Now this is another thing. Don't forget, this is the closure of the week. Now, don't forget, we also have another key level here, which is this particular key level here. You might be wondering, how am I able to know that this is a key level? You can just switch to a line chart. It will really help you. See how line charts will help you in detecting or knowing all this easily. So what do we want to do now? When you have something like this, we want to wait for the new week candle to form, right? So let's just go to our daily time frame and see if we can refine any key level on this particular market we have done so far. So currently, this is our daily time frame. So on the daily time frame, you can see that we have a rejection. This particular key level is very, very perfect. It's very, very, very okay. You see, now we have this key level. Now let's switch to a line chart. You can see this is a level that has been broken, more of like RBS key level. And don't forget, we also have another key level here, which is this. But let's switch to a line chart. I think let's use this OCK level instead, because this OCK level seems like a very valid or strong key level. Then don't forget, we also have this key level here. right? Now, mind you, the reason why I'm picking out all these key levels is because I really want you to understand it better when you are doing this on your own. Now, I've always advised my mentorship students on something, and which is something that really helped me. I've always advised my mentorship students that when they are doing their analysis on their charts, forget about your charts looking so sexy or looking so sweet, right? Make sure you mark out every possible key levels you are seeing on your chart, so that when market comes to react off them, you'll be able to understand where and how or why market decided to use some certain key levels, right? So mark them out. When you get your valid reaction and a rejection, you can choose to take them out. And again, don't forget, on this particular teaching I'm giving you, I'm sharing with you right now, we are not going to be making use of CRT, because CRT are not formed on this particular teaching. But if along the line, if we see a CRT, we'll make use of it, because most of my teachings have been crafted around CRT, daily CRT, daily CRT. So it is an avenue for you, opportunity for you to still learn how to analyze when you are not seeing a CRT on your chart. I call this what? CRT rejection method. This is not CRT method. This is more of like a rejection method, but basically using MSNR and SMC strategy, right? Combining everything together. So let's quickly proceed. So the next thing I want to do now, let me forward this so we can get a rejection. So you can see how this next daily candle, this is, let's say this is Monday candle, the week has opened, right? This is how Monday candle formed. It came down to react from this OCK level. In scenario like this, that we already seen that market didn't respect this particular key level, but it came down to respect this one. What are we going to do? Just take out this key level so you don't confuse yourself too much. Now this candle hasn't closed, so you have no business deleting this particular key level yet, because market can decide to use this, and maybe it might use this with the new candlestick and give you a CRT. Then you can continue building your bias from there. But in this scenario like this, we don't know what market is doing now. You need to wait for a rejection, this candle closure, a rejection, and this candle closure. So let me fast forward it again, then we'll see. So the new this is Monday candle, this is Tuesday candle. Tuesday candle formed and also respected the key level, right? So what do you want to do now? Specifically, you don't need anyone to tell you that you have gotten a valid rejection here. So I'm just going to delete this key level below. And what do you want to do next? We want to go to our 4 hours time frame, right? So let's go to our 4 hours time frame and see, wait for a possible rejection, or let's say a breakout. Or if we don't see a breakout on the 4 hours time frame, then we can use the 2 hours time frame. So this is what we have on our 4 hours key level, right? On our 4 hours time frame. So I will just have to adjust this so we don't make our chart look messy, right? I don't want to delete this, so you get to understand that this is where the daily time frame or the daily rejection happen, right? So we want to know where we have gotten our 4 hours breakout. So from the look of things, where are we seeing our 4 hours breakout? This is where we have our 4 hours breakout. If you are confused or you don't know why I'm picking this as my 4 hours breakout, you can actually go to the line chart. This will really help you a whole lot, right? So you can see we have our breakouts here. These are 4 hours breakouts, and mind you, this can still be a key level, so just mark it straight. Then let's switch back to this. Then we also have another key level here, which is what the appears key level, which is also what we call the V-shaped key level, right? So you just have to mark them. See the way I'm taking my time teaching this, right? This is something I should have kept with just my mentorship students alone, but I'm bringing it out for you so that you can learn from it and make money for yourself. The little knowledge I shared on my channel, they are packed with the videos you see on my channel. They are packed with a whole lot of values which can help you in building a proper and a better trading results or trading journey for yourself. So now, what are my expectations? My expectation is that market should come down, reject from here to the upside, right? Don't forget, this is our target. You can target this if you are not greedy as me, or you can target this or target this, right? Then if we don't get a rejection from here, then we expect what? A rejection from this upper key level. So whichever one, we'll trade based on what markets do or markets present for us. So let me fast forward the next candle. Let's see how it's formed. You see, I'm very sure that there are some persons who would want to take an entry from here, referring this to be what? A breakout block strategy, a breakout block entry model, or you can equally call it what resistance broken, turn it to a support, because this guy really formed a good liquidity very close to this guy. But for me personally, I don't like taking my entry from the 4 hours time frame, so I will not be doing this. But peradventure, if you are those who would love to do something like this, make sure that your SL should cover this apex key level, because you can't tell, market might not use this guy but use this guy. So if you are going to be doing something like this, you should make sure you have something as this. Let's say your SL should cover this low, because now officially we have gotten what we call a sweep at this place, right? We have gotten a sweep here. So your SL should cover there. Then you can take this to our overall targets. Either a target here, this will give you 5.6 RR, or a target here, this will give you 3 point something RR. Then let's say you can just decide to make it a 4 RR, right? So you can have something like this, right? So let's fast forward this and see if it really worked out. So you see market tapped into the key level, and you see what I was talking about. One thing is, okay, let me fast forward the next candle and see how it plays out. Let's see. I don't know why this is taking much time to load, because it's my network, right? Now we have something you can see. Now this is what I was talking about. Let's say you are focusing majorly on this particular key level and you decide to put your SL around there. Officially, you must have hit what SL, right? So this is why I always give advice that when I have multiple key levels on my time frame, on the particular time frame, always wait for what? A rejection, except I don't have multiple key level on that time frame. I hope this is very, very clear. So putting your SL here, below here, is cool, but this is a sweep, so your SL should come below the sweep. This is how I set my SL, right? This is very, very, very perfect and very, very okay for you. So let's see something. Let's write it from here and see how it plays out. I'm going to bring it back so that we can look for confirmation entry, right? So let's see. So okay, I think let me just proceed with the confirmation entry so that we don't take much of our time in what we are doing here, right? So let me just take this out. So let's say this is more of like a direct entry. If you want to do a direct entry, you don't have that patience to wait, right? If you have gotten all your stuff you need, you can equally discuss. This guy has provided a liquidity for you. So now let's take this guy out. Let's assume that this is where we got our rejection from, right? So let me take this back a little. So let me take this back a little. So this is what we have on our 4 hours time frame. We have already gotten a tapped into our key level, and this candle rejected off this key level very, very well. So what do you want to do? You want to go to your next time frame, your 1 hour time frame. In this scenario, we are going to be using 1 hour time frame as our entry time frame, or you can equally use 30 minutes as your entry time frame. For me personally, I'm going to be using my 1 hour as my entry time frame. And mind you, if you really want this video to go viral or to meet other traders or to help other traders, just take your time now to like this video, right? Make sure you like this video. When you like this video, the YouTube algorithm will take this video to other traders who really need this teaching. I'm making this from my own heart to the community. So do it to like this video, comment, leave your views below in the comment section. I'll be active and I'll appreciate your effort as well, right? So in this scenario, on our 1 hour time frame, what do you want to see? I've always said this, that when you come to 1 hour time frame, make sure you see a change of character, right? Market is giving you something like this, coming to the downside, doing something like this. You want to wait for a change of character. Very necessary. When you have the change of character, that's when you can start looking for possible area where you want to take your entry from. And this brings us towards our entry model as well. You can watch my previous video. I've already made video on all this. It's not something new, right? So now we got 4 hours rejection here. Now for those who use an engulfing entry model, definitely they would want to use this guy here as their entry points. This place as their entry point. But I don't trade engulfing entry model. I don't use engulfing entry model, right? So they will just do something like this, put their essay around here, then targets. Either you can target this guy, You can see it's giving you 4 point something, or you can target here, or you can target the overall target, but that's not what we want to do here, so I'm not going to do this. So let's just watch and see. Then now, what's our expectation? Our expectation is that we have already gotten a key level which we would love to trade from, but there's no liquidity yet. So let's see if markets will form a liquidity for us, then we can take our entry from this place, right? So let me fast forward it and see. Let's see what we have. So equally, I can call this my liquidity points. Yes, this is okay to be my liquidity points. I'm going to switch to the 15 minutes time frame and see how it looks like, right? Okay, 30 minutes time frame, sorry. So I can equally, yes, it's very okay. Then you can adjust or refine if you want to refine. For me personally, I don't think I will refine that, but let's see. Let's just take it back to the 1 hour key level which we were having before. So let me go back to my 1 hour time frame, right? So when you have something like this, what do you want to do next? Let me check something, right? What do you want to do next? You want to set your position to, right, your buy limits. I don't love using tight SL, so you will not see me doing something like this. No, I would rather take my SL, move it a little bits, and targets. You can equally target. If you have a fixed RR, my fixed RR is 4 RR, which is my minimum fixed RR, or you can target our usual target, which is where here, right? So this is something, this is a setup we are having. So let's fast forward and see how this guy played out, and if it gives chance areas of re-entry, we are going to look for re-entries, right? So let's see. So you see we got a tap into this key level, right? So let's proceed. I think I'm just going to play it from here. It should just move faster than this, right? So you can see how it moves. You see how markets respected this key level. Don't forget, we use what? Confirmation entry. Please don't forget, we use a confirmation entry. Now, this will give you higher. The reason why I always advise you that you use confirmation entry when you are trading is that it gives you a higher reward, and it also reduce. It's also like when you're taking a direct entry, when you're taking a direct entry, you don't know if markets might disrespect a particular or a certain level. But using a confirmation entry, it reduces the risk, right? So let me just stop there. Let me not crack much grammars or much talk, right? So in a scenario like this, now after getting this tap, basically there's a break here, right? There's a break here. I might decide, let me switch to a line chart and see. So I can just have this guy here as my new area where I might be expecting a re-entry from. So let me just shift this. So let me shift this, right? So now the reason why I might decide to take entry from here is only when a liquidity is being formed. This candle hasn't closed. You can't tell if this is a liquidity. I don't use single candle liquidity. I don't trade like that, right? So let's fast forward and see. I want to see a liquidity. When I say liquidity, that's when I would have interest, or I would love to enter this market. Sorry for the delays. Taking my time to explain this. Okay, I can equally use this guy as my liquidity now. I'm very, very okay, right? You can choose to put your position to as a new area where you want to trade from. Like I said earlier, I don't use tight SL, right? But mind you, this is more of like a sweep, right? So you can equally decide to put your stuff here, which is what I'm going to do because that's the way I trade. I don't use tight SL. You can put your targets here as well. So this will give you a 7 RR. So let's fast forward it and see how it plays out, right? See, I've always said something that when you get your variation, when you get your, let me pause this. When you get your direction, right, from the weekly or from the daily, you don't necessarily need to have 30 pairs, 20 pairs, 10 pairs on your watch list that you are trading for that week again, right? All you just need to do, build that bias down to your entry time frame. When you build that bias down to your entry time frame, what do you want to do? You want to take an entry just the way I took this entry now. Then you keep watching. If market presents areas of re-entry, you continue doing re-entry down to the target points. That's what you just need to do. You don't need to stress yourself doing much. one pair for a week is enough, because let's say, for instance, you took three decent trades. When you take three trades and you lost one, you win two, you are in good profits. You took 2 trades in a week, you lost one, you win one, you're in a good profit. Forget about your risk to reward. 3RR, you're using 3RR, you're using 4RR, 5RR, whatever, right? The major thing is that you should be consistently be in profit, right? So this is it. Let me fast forward this. I think we are taking much time on this particular teaching right now. Let's see if market comes down to respect it or to tag into it. Okay, you can see we got a tag. Market tagged us in here, right? Market tagged us in here. So let's quickly proceed and see. Now, currently we are on 2 trades right now. Let's see how it moves. As you see area of re-entry again, I'm going to look for another re-entry, right? So I think there's an area of re-entry here. Let's we have already gotten a break of structure to the upside here. I've gotten a break here. So this validates to me that we are still bullish. Market is bullish. Yes, market is bullish. So let's see. Sorry for my network. Don't know what is happening, right? So this validates that market is bullish. So where is my possible area for re-entry? I can have this guy here, but I don't think market will drive down to this key level here. 1, and also we have this key level. One thing about my style of trading is that I don't neglect any key level, right? So I will just mark it out and see how markets react from it. So we also have this key level here, and you can see these guys can serve as liquidity for us, right? So I will just have my position to be placed somewhere here. My SL will be, I'll use my SL to be the entry of the previous stuff. 2 entries is enough. You don't necessarily need 3 entries. So this can be a 4RR trade for us. So this one 4RR, then this one 7RR, then this one 9RR. Let's see how it plays out, right? So let's see. Got a miss entry on this particular guy, right? So it's fine. It's fine. You don't necessarily need to. It don't necessarily mean that you catch every entries, right? Just do your stuff perfectly and leave the market the way you can, right? So this is what we got. We got smash, take profit, smash. Don't forget that this take profit was gotten from here, from the weekly time frame. You see how we trade without using. I didn't talk anything about CRT here because I keep getting a whole lot of DMs that if we don't see CRT on our chart, does that mean that we will not be taking any trade for that week, right? So you don't necessarily need to just basically focus majorly on CRT, because if you build yourself around that, definitely if you don't see CRT formed on your charts, then you might not see entries, right? Or you may not take trades that very weak. So you can use your rejection method just the way I've shown you guys right now. And mind you, if you're having any issues in any aspect in these teachings or in this video, do well to come back, rewatch it, because you can't just, at times you don't necessarily need to watch something once and you get a proper understanding. You can come back and rewatch it for a proper understanding. And if you have any question from this teaching which you have watched so far, do well to leave it below the comment section, as I'll be active in sharing or in helping you or in assisting you with your question. And mind you, if you don't want to miss out on awesome teachings as this, which will help you in your trading journey, so do well to like this video as well, so that to get to other traders who really need these teachings, right? And YouTube algorithm will also help us in taking it to other traders. So do well to like, subscribe, leave your views below the comment section, and see you guys in the next teaching.